Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
We're kind of getting the band back together, as we like to say, a voice that Matt and I have leaned on a lot over the years during moments of stress in various market cycles. He's got a great perspective on the rallies and the sell-offs that make a market cycle. Back with us is Joe Saluzzi, partner, co-head of equity trading at Themis Trading, joining us from New Jersey. How are you?
I'm great, Carol. Good to get the band back together. Like you said, quite the reunion tour after the years.
We've had a lot of fun over the years.
Yeah. You know, I mean, one of the things that I always love to talk to you about, Joe, is market structure and trying to figure out what exactly is happening. So that's why I thought of you instantly this morning when we saw the Nikkei down, 12% overnight, and it was limit down. A number of time circuit breakers were tripped. And then this morning, futures were hit much harder than the market had been on Friday, and we opened off more than 4% on the S&P, more than 5% on the NASDAQ. And I'm just trying to wrap my head around what happened. Is this from the Bank of Japan? Because that happened on Wednesday, and we didn't have a sell-off then, but we're starting to hear about carry trades being unwound, and it sounds very mechanical. On the other hand, there's a growth scare, right? So what is it?
Yeah.
By the way, I'm looking at the wrong camera. Look, I have two cameras here, and this is not the right one.
Matt, let Joe talk.
Sorry.
Well, you guys have all the reasons. I've been listening to the show during the day. They're all out there. People got a million reasons why. But, I think it's also a liquidity issue, and it's always been a liquidity issue when you get volatility like this. And, bids disappear. We've talked about this years ago when bids disappear and, sellers come in. And for instance, I was trading a couple of small caps today for some clients, and I was buying. And you would think it would be relatively easy to buy, and it's not. It really isn't. It's still, the players in the stocks, they're not necessarily individual stocks anymore. It's ETFs, it's indices, it's futures, it's options. It's derivative-based products. And I think that really is the problem. It exacerbates these moves really quick. And you get days like today when the bottom falls out for, any one of several reasons. And, it scares people. It panics people. I mean, a VIX at 65 pre-opening. Are you kidding me? I mean, that was ridiculous. I think we closed like 38. But I think it's people just get nervous, and it's that derivative leveraged effect that really drives it down.
I'm so glad you went there. I was looking at a Bloomberg Big Take story back in July about the 24-hour stock trading and how it's booming and Wall Street is rattled. You were quoted in that story, and you said, and this was basically looking at retail investors and how they're making trades basically 24 hours a day, 5 days a week. And you said, we're only going to have trouble in the middle of the night when things are so illiquid. So, Okay, does that continue? How do you think about where the momentum goes from here? Or does this momentum continue?
Sure. On that 24/7 thing, I think it's ridiculous, by the way, that individuals now, there are certain areas you could start trading at 10 o'clock at night on a Sunday night, individual stocks, which I think is absurd because there really is no liquidity. And you're just looking for trouble at that point. There are some caps of 20%, I think, up and down. But, for individuals, and here's the way I look at it also. The crypto market, which I made fun of for many, many years, and I thought it was a joke, and I still think it's a joke. The equity market and the crypto market are starting to merge together in this style of trading, in this, hey, let's just trade whenever we want, and we'll just zip in and out. That's not the way it's supposed to work, at least not in the equity market. If the crypto guys want to do that, good luck. But the equity market, you're supposed to have an opening and a close, and there are these liquidity events throughout the day, which helps set price, and you just don't have that right now.
What in terms of what we've seen, the unwind of the carry trade, and I've heard a lot about margin calls this morning as well. How long does that take to play out? How long do we expect this kind of volatility to stay in the equity market, Joe?
I think today was excessive. I don't think you're going to see that 65 VIX again. Not for this week, unless we see some new news. You'll get this. I don't think we're at a bottom here on this little correction. I'm going to call it a correction because I think that's what it is. I think these are normal corrections when you had a market that's been up so much throughout the year on kind of sketchy details. Let's talk about AI, right? I mean, what's really going on there, right? But I think you got a correction. It will come down. You're not going to see that super volatility that you saw today. But, it's going to take some time for it to kind of smooth out. And then we'll get the Fed later on in the month at Jackson Hole on whether May, September, and things will stabilize. So I'm not really thinking that this is a big downtrend coming. I think it's certainly something to be aware of and to be cautious of, but it's nothing to panic about like Jeremy Siegel was this morning.
Yeah, I was going to ask, what about the emergency meeting, Joe? Aren't you convinced that the Fed's going to rush in and in a panic cut rates by 75 basis points?
They only do that when Wall Street banks are in trouble. We know that, Matt, right? So right now, I don't think you have that. The banks are fine. It didn't seem like there's anything going on there. When you're calling for emergency rate cuts, it's when there is a global financial crisis, right? The GFC. We don't have that right now. We don't have anything like that right now. Everything's actually fine. We had one unemployment number, which looked a little bit worse than expected. So, no, there's no need to cut 75 anytime, I think, before the next meeting. The Fed would look nervous. They would look like they were panicking. That's the wrong signal. Now, they can get out there and start jawboning and doing like they normally do and have a few speakers come out and say one thing or another. That'll be fine for the market. And we'll get going from there.
Joe, what would tell you that there is some stress in the markets? Is it, watching financial market conditions? Credit conditions? What are you watching?
Yeah, when you look at some of those spreads and you look at junk bond yields, things like that, and you're looking for particular spikes out there, really out of the ordinary, like that VIX spike. Nothing, but to be honest, that was a bit scary in the morning, but you don't have that right now. So yeah, credit things are really the problems. Let's look back at 2007, 2008, 2009, right? That was all credit. It was all about commercial mortgage backs. People have talked about it, but nothing really seems to be going on there. So I think at this point, yeah, there was some excessive valuations when it comes to equities, and some of the PEs were getting a little bit stretched, which is why a correction is healthy. And by the way, the guys over at Brennan and Associates, they put up some good numbers, and they wrote the average correction since 1980 is 13.5%, and it lasts about 90 days. So, we're down about, 8% off the highs or whatever it might be. We're in a normal correction right now, so I'm not really worried if we start getting a little bit more fueled from there. But right now, I think we're okay.
And a rotation? Do you think people are done buying these mega cap tech stocks and are going to now look for dividend paying stocks or smaller cap stocks?
That had started last week or a couple of weeks ago, which I thought was, it was underway. We were getting going. The small caps, the Russell was finally moving. It's taken forever for that Russell 2000 to get some action, and you saw some money coming out. But it kind of failed. It was nice to see that they did bounce off the lows today. So, that was a bit scary when they were down there. But we bounced nice and we closed okay, which was important, I thought. So
off our lows, right? Off our lows.
Yeah, off the lows. And you didn't get that. I thought a lot of people were expecting kind of what we call a dump at the end of the day. And you didn't get the dump at the end of the day. You kind of just stabilized where you were. Yeah. So that to me is positive. I just noticed the overnight, actually after hours action was a little bit positive in the indices. So let's see. I think let's not panic, but I don't think let's not be too complacent either. We still got to worry a little bit.
Don't tell the rest of the guests, but we saved the best for last. But don't tell anybody. All right, Joe Saluzzi, you're the best. Of course, co-head of equity trading over at Themis Trading. This is Bloomberg. Joe, thank you.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.